Okay, thank you for taking the time to come meet with me online and get my feel on things. I'm sorry it has been a while. It has been a topsy-turvy 2025, and I'm sure you're all quite aware of what's been going on out there. So I've really, just like you, I've been trying to take it in and trying to follow the ping pong ball as it's going one direction, then the next direction. And a big part of that, of course, as you can see in the screen behind me here, is the trade, I guess, war between Canada and the U.S. And then, of course, there's that whole Trump card, excuse the pun, but it just that seems to be kind of messing everything up. Some would probably call it more of a Joker card, but anyways, let's dive in and see. And I'm going to break down for you a little bit of the mortgage side of things. There's some good news there, and then there's the real estate side and how that is impacting things. It's been quite the surprise. The sentiment was going a certain direction, and then of course with all this topsy turviness, it is really kind of caused everything to go a little haywire. But hopefully I can help kind of clarify things a little bit more so you can kind of make your own plans. And by all means, this is just a top level review of the overall market, both on the mortgage side and the real estate side. And as I've said numerous times, how the two come together to kind of impact one another. So without further ado, let's go look into the mortgages. Okay, so right off the get-go, let's start with some good news. Bank of Canada, as you can see right here in this article, has announced another 25 basis point drop. Not huge, but hey, every little bit is appreciated in this economy where we have been dealing with inflation for the last year plus, and then of course, the unknowns of the trade war and everything else out there. So we should start to see many of the banks subsequently drop their prime rates because that's how it works. The central bank adjust their prime rates, and then typically the banks will follow suit within a week or so. So any of those who have a variable mortgage, you should see an immediate impact on your how much is going towards principal and how much is being paid towards interest there. Unfortunately, on the fixed side, it's not quite the same thing. The fixed market actually is based on the overall bond market, which is yeah, it's a little bit more topsy-turvy. So I'm going to jump into actually a good little graph here, which I think exemplifies what I'm talking about. So I'm looking at the Canadian 5-year bond, but really you can look at any bond, a 10-year U.S. Treasury or bond or anything like that. What I'm really paying attention to here is not so much the rate, but the trends. Okay, if you look at the back screen here behind me here, we've got back in the fall, and we kind of hit a low, as you'll see, and then it actually started creeping up. So I do know a lot of clients, and if you happen to pay attention to my newsletter back in the fall, I did mention one of our lenders had a promo where you could get a short 6-month mortgage term. And in light of the mortgage rates that seem to be coming down, as you can see, earlier in the year, they were quite a bit higher. And the bonds, the fixed mortgages were starting to really drop off there. And they kind of hit a low in the September, October. And our hope was that we continue to see that slide downwards. But as you can see, quite the opposite happened, and the overall bond market started to go up, along with the rest of the markets there. And I think a lot of that had to do with the optimism that was being felt with the U.S. presidential election coming to an end, and I guess Trump taking over and whatever else. And as you can see, going to about February here, if I jump into the end of January into February, uh, things did not seem to pan out the way everybody thought. The optimism may have been a little bit premature, and so we've seen the overall market go down, including the bond market. On a positive note, though, that means the bonds are finally starting to drop, or sorry, the fixed mortgages, the 5 years and the 3 years, are starting to go back to where they were last September, October. So if you would have called me over the winter months, unfortunately, your rates kind of would have been a little bit on the higher side, but we're down here. Now, we'll see if it continues to slide down or not. I think a lot of that's going to play into the whole, the market situation, what's going on there. Right now, I do have some lenders and a few specials that are actually under the 4% mark, around the 3.99 if you're purchasing, or close to that range, which is very nice to see because, again, back to around Christmas time, we were around the 4.5. Now, these are not refinance rates. These are your typical renewals, your switches, a couple specials from a few different lenders. Of course, there's pros and cons with these, but by all means, if you have something like that, coming up, give me a call. Actually, right along those same lines, I will share with you a newsletter that I do. I do follow the American side of things. I often feel like they give us a good sense of where things are going. And this company here, it just tracks things right across the U.S. And you'll notice right here, there's been a big jump in home refinancing. And I think that has to do, later on in the article talks about, but I'll kind of summarize because I'm finding the same thing right here in Canada and talking to my colleagues there in the mortgage industry, we're experiencing very much the same. That the mortgages on the refi side really were on a bit of a hiatus over the last couple of years with the rates being as high as they were. Now the rates have come down, and again, they are higher than your typical purchases or your switches, but they are significantly down. They're probably down at least 1% from where they were. We're in the mid fours to high fours, whereas last year or so around this same time, we were probably about 5.5, 5.7 type thing. So this is quite nice. And I think it's because of the inflation and a bunch of other factors there. The market has been a little bit tougher, which is one of the reasons why the Bank of Canada has been dropping the central bank rates to kind of help spur on the economy. People have been unfortunately tapping into their credit cards and other things there. So unfortunately, in light of that, people are taking advantage of these refinance opportunities and consolidating those debts. So much like the Americans, we are starting to see people jump onto the refinance bandwagon. So yeah, that's a very insightful side of things there. So it's going to jump into the real estate side and where things currently stand in regards to that. And I think just one last note from our president, Mike here, kind of did a great job of kind of summing, I think, what many of us have experienced right here. So I'm just going to read off his newsletter again in behind me here. We entered 2025 with a lot of optimism. Rates were dropping, and this is great news. And the market was gaining momentum. So far, the outlook has held. Most brokers have seen a strong start. So from the mortgage side, it actually has been very, very positive, and possibly could be getting even more positive. However, and there's always that big however there, economic uncertainty is rising due to escalating trade tensions with the U.S. president. Trump's broad tariffs on Canada goods have been met with retaliatory measures, leading to stock market volatility and weakening Canadian dollar. If this turns into a prolonged trade war, economists predict a 3% drop in Canada's economy output, a 12% decline in business investment by 2026, and slow long-term growth. So as a realtor, the big question is, how is all this going to impact? Because it sounds like I'm kind of talking on both sides of my mouth. Good news, mortgage rates are down. We can afford more. We can refinance, consolidate those debts. On the flip side, I'm hearing all this negativity about the market and where things are going to go. And so, without further ado, let's jump into real estate analysis. Okay, before I jump into some of the real estate stuff a little bit more local, I'm going to once again reference the article material I get from our American cousins out there. And I think this caption kind of sums it up quite nicely. Buyers are looking but aren't buying yet. So we definitely got a lot of interest out there. If you look at the recent market update we have from our board, this is the headline for this last month of February. New listings rise while home sales decline. So much like the Americans, we're finding a very similar situation there. And this kind of leads back to the mortgage side. Mortgage brokers see Ontario home prices grinding down amid trade war. So this is definitely a concern. While the mortgage rates are dropping, and in essence we can afford more in light of this economy, 2025, as our president indicated, the mortgage president, was predicted to be a very good year. People getting off the bandwagon, stop renting, start buying, everything, even the valuations, because typically when the demand increases, the cost goes up. But so far we have not seen that. So again, looking back here at our local Kitchener-Waterloo market stats, we are definitely seeing a lot of inventory, but you'll see it's very flat. Not a lot of growth there. Single family townhomes actually seeing a bit of a drop, and the condos and so forth and so on. Here, another headline right here from the Real Estate Magazine. Canadian housing market struggle as U.S. trade woes mount. Okay, so it does sound negative. However, as you know, I do like to jump into the deeper details. So if you look at our peak stats, here's the overall look, taking into account all home styles, so detached, condos, and all the rest. And you will see actually on our chart, we're seeing a bit of an uptick. That being said, this is where it's really helpful to have a discussion to kind of get right into the details, because as you'll notice, that is for the month of March. In March, we happen to have a very large, number at 786 here. Okay, whereas the month before, the average sale price was 746 across Waterloo region, hence the huge uptick. But if you ignore that uptick, which was really only, not even 2 weeks in, we're still quite down market-wise as far as overall values. And I suspect a lot of this may be that what is selling, and that's what we want to kind of evaluate. What is selling? Because obviously stuff is still selling. As you can see, we've thus far sold 87 homes for the month of March, and last month, February, 224 homes. And it's been a mix of condos, townhouses, detached homes, and all the rest of it. So going into the detached homes, you'll notice prices really seem to be holding their value. It's not really going up, not going down. Very, very flat. Like look at those charts. Okay. And that tells me that's what people want. People want these detached homes. I suspect that, part of the problem we're having is that our average sell price is in around 890 to 900,000, and only so many people can afford that price range. If we could afford more, we possibly would see that increase. I do think, again, with the mortgage rates dropping, people can potentially afford a bit more, but they are being cautious. We're seeing a lot of caution there. As they've indicated on the recent newsletter, our president, our CEO there, has indicated that we actually are seeing a lot of action at all the open houses. So clearly there's a lot of people that want to buy homes. It's just that into the semi-detached homes, again, if you look at it for the month of March, we've actually indicated insufficient data. Okay, we did have a good February for the semis, kind of increased a bit there, and I suspect it's these type of homes, the freeholds, that are pushing the overall valuations up. Okay, carrying on to the townhouses, very similar, kind of flat, okay market. Not enough data yet for the month of March, but overall pretty good. Freeholds, they're holding their valuations. But carrying down to the condo townhouses, unfortunately, just very weak. It's flatlining, I guess, like much of everything else. But we've just got large inventory. 260 last this week before 250 homes. So it's going to take us a while to kind of get that move. So just like the higher priced detached homes, similarly with the condo apartments, causing a bit of an issue there, slowing us down. And of course, our apartment condo is probably one of the hardest hit areas. And I do think that might be potentially a little bit of an anomaly there for the month of February, 434, but again, very, very weak. But clearly, people are buying, people are looking for those opportunities. So the key is to educate yourself, know what the opportunities are. In regards to the mortgage side, a lot of people are saying this is a good opportunity to buy into to get yourself a variable mortgage, because if things continue to go a little bit south, we are most likely going to see further rate cuts by the Bank of Canada, which of course will mean people can afford more and whatever else. But the flip side of that is, of course, the economy will be hit, and who knows how that's going to impact people's ability to buy and all that. So the question is, do you go variable? If you have a high tolerance level, by all means, go with the variable. The catch, though, is that if things should um, patch up, which obviously a lot of us hope will happen, then we could see quite the reversal very, very quickly. So I do caution, if you are going to go variable, as of right now, I agree with everybody. Going variable seems to make sense. If we continue to see the economy slow down, this thing does get drawn out, then a variable is a good way to go. But if things, Trump and everybody else is kind of able to work things out, then we could see a reversal. We could see the economy really take off. And at that point in time, those who have been sitting on the sideline waiting for the opportunity to buy into a home may be very disappointed. Okay, so then this leads me to the article I've got behind me here, the rent trap. A lot of times people think about, oh, like my cost to rent versus my cost to own, because I got property taxes, I got the home insurance, I got the maintenance, whatever else. It makes more sense. But in the long run, if the valuations do go up, you'll see that it's going to actually cost you a lot more. And one thing I've said to numerous clients, and I'd like you to kind of share this, feel free to share this with anybody you think could perhaps benefit from it. And I would recommend a consultation, a complimentary consultation. You can sit down with me and I can give you the pros and cons of the rental side of things. I think it does make sense in some cases, but something that you should always keep in mind is typically in the long run, rents go up and interest goes down, and of course principal goes up. And so really you want the principal, the more equity in the home, to go up, not the other way around, paying more and more in rent. And this article that was put out here by Zoocasa does a great job of kind of explaining some of the pitfalls of renting. I think right now we've got a lot of people jumping onto the rental bandwagon, and I think another 5 years from now, a lot of these people are going to wish that they perhaps made that decision to buy, especially considering mortgage rates are starting to drop down. Great opportunity. And being that the competition is a little bit lighter, perhaps this is a great time to secure something. And based on what I'm seeing, I would recommend the freeholds. The freeholds are definitely holding their value, especially with the lower price stuff, the townhouses, the semis. Yeah, I trust all this has been helpful or insightful as you try to navigate this topsy-turvy world, and I'm sure it's going to change a lot by the time I provide you guys with the next update. So by all means, if you or somebody is contemplating buying a home or has a mortgage coming due or anything like that, have them reach out to me. It's good to have an in-depth conversation. Sometimes it's even a good idea to do some preparing for the long run there. I've got a number of lenders that will actually help you with the down payment in certain ways. There are various programs in the city. And the big thing, as I mentioned earlier, is if you are currently a renter, you got to look at the bigger picture and think about how much money you're throwing away every single month in rent, and perhaps it makes sense. I do have some great programs where I can kind of do a rent to ownership side by side comparison to kind of walk through that side of things. Similarly, if you have a refinance for consolidation, I have also very helpful programs that I can utilize to kind of do a side by side comparison to show you where it may or may not make sense to perhaps consolidate some of those debts. I'm going to leave you on a positive note here. I've got this great little article, or actually a weekly update from one of my associates that works for one of the other branches there. But I like it. Again, I got lots of information just so I can share that with you and have a better sense of where things are going. And the one thing is, I'm just going to actually paraphrase what the gentleman said here. The markets can't seem to find its legs. Weak sales and more listings. Interesting to note that 62% of all sales last week were sold actually under list price. Okay, so for those of you who have perhaps been thinking about buying a home, this may be a great opportunity. These numbers were very much the opposite. Now, keep in mind, that still means 38% of the homes did sell above list price. And what I am seeing a lot is people underpricing. Given the market that we're in, those that don't want to wait are significantly underpricing. In some cases, 100, 150,000 under list price. So, just because somebody paid above list or below list, that doesn't tell you the whole picture. You really got to know what the true market value is. And that's where you're going to want to call somebody like myself, a professional, who can pull the comparables and then kind of show you how these two compare. Sometimes the person who got the better deal is the person that paid 100,000 over the list price. Okay, and sometimes the person who got $50,000 off actually still overpaid. I know that sounds crazy, but that's how it is. Okay. So given this market, we do have right now 932, as of last week, 932 active resale listings. 344 of them are apartment condos. So that also kind of paints for you a bit of the picture as to what's going on here in the Waterloo region. Anyways, I look forward to hearing from you guys. Oh, last thing, taxes. How did I forget that? Go through the email below. I've got a bunch of information there. There's a section that talks about credit, the importance of credit for those of you thinking about buying homes, or even if you're not. Good link to have that will kind of protect you from fraudsters and other things that you should read into and understand. Check that out. And taxes. If you need somebody to help with the taxes, I've been doing taxes for way too long. By all means, that's something I can definitely help you out with. So feel free to reach out to me, shoot me an email, text, whatever else, and it'd be my pleasure to assist. And of course, those clients who I regularly help on the tax side, please, guys, shoot me your information. Don't leave it to last minute because, as you know, I am a very busy person and I do love helping you, but I also want to keep my stress level as low as possible. Thank you again for taking the time to check out this interview, and any feedback would be appreciated. All the best.